All right. I think I've got technology under control. Welcome to the Money Date, take 2. Hi, Linda. Welcome. I'm glad to have you here. We're going to chat in a few minutes about homeowners insurance and what happens if you have flood or if you have fire in your home. And there are some misconceptions that I think a lot of us have, that just because you have homeowners owner's insurance does not mean that the coverage is entirely to standard and you actually going to be completely covered. So, but before I dive into the actual discussion with Linda, I'd love to welcome you guys here. 2 reminders. We always get together for a Money Date because we want to make sure that we've checked in with ourselves in terms of where our finances have been for the week. We know where our savings are, we know how much money we spent, and we know how much money we made. Those are the 3 things that I ask you to track every time. You know why? Because that's the foundation of all of our finances. And it still amazes me up until this day that we get so busy and, don't want to spend just a little bit of our time thinking about it. But it does not have to be overwhelming. It does not have to be complicated. So even though if you're busy, hi, Lori, thanks for hopping on for the 2nd time. So even if you're busy, it's not an excuse. There are tools and resources that you can use, okay? Now, one of the things that I'd like you to do, if you guys are watching, please share this out, as well as share your money wins with us. Linda and I will talk in a minute and share what has been awesome for us this week, but I want to know what's been good for you. Money win is a positive gratitude moment that you've thought about and reflected back. I've got a couple that I want to share with you. So welcome, Linda, to the show. I'm so excited to have you here. Linda Fullman is the owner of Fullman and Lawrence Insurance Agency out in Texas, Longview, Texas. I think I got that right. Great. Longview, Texas. I think you have 2 offices. So Linda is licensed property and casualty insurance agent. And interesting story that the passion for Linda came to help folks with this kind of protection, right? Out of the personal, not so pleasant experiences, I understand, 20 years ago when you were hit by uninsured driver. And that's one of the things that, oh gosh, I've reviewed tons of policies and people being underinsured is one of those things. So I'm sorry that was an experience that you had to go through in your life, but it's a good thing because you're here today and you're going to help a lot more people avoid those kinds of mistakes. So welcome. I'm so excited to have you here.
Thank you so much, Anna.
Yeah.
I'm honored to be here.
Awesome. Well, so how about we start with this? How about we start with sharing a gratitude moment, and then we're going to dive into talking about flood insurance and fire protection. Okay. So you want to go first, since you're my guest?
Absolutely. So my gratitude moment actually ties kind of into the quote that I'm going to give you later. I belong to a group called 100 Women Who Care of Longview, and we have given out over $37,000 to a local nonprofit since we formed just last fall. So that is my gratitude moment. We're about to meet again and select another entity, another nonprofit in our local geographic area to give another substantial sum of money to. So we're hoping to give over $10,000 again.
Wow, that is fantastic. Awesome. Well, mine is somewhat similar, but not as financially rewarding, I guess. My team and I had our annual team retreat here in Washington, D.C. So I'm traveling this week to the East Coast, and we spent a whole day. So my team is remote. Everybody is kind of spread out all over the place, and we very rarely, I'm probably thinking that once a year or so, we definitely get together. So this was one of those times that not only we spent time together team building, but also talked about business strategy and where we actually taking Main Street. We just talked about last week, we just rebranded. We have a new logo, we have a new website. It's kind of we got a facelift. So with this new, rebranded, facelift that we have, our business has been around for 16 years, so we're not quite new. But, we discussed where we're going and where Main Street is headed. And basically, the big question that I'm always trying to answer every day when I wake up is, how can I help more people? And how can we all together work and help more people make smart financial decisions? So one of the ideas is, how can I connect with experts like Linda, right? To bring some of the knowledge that perhaps I do not have. So I am extremely excited for that. But there's one other one other money win that I want to share, but I'll hold on that maybe at the end. So let's dive into the discussion, Linda. And I think it's worth mentioning, we're starting our discussion with the fact that a lot of people assume that just because they have homeowners insurance, they are adequately covered for instances like a fire happening, right, or a flood. So let's take one at a time and kind of maybe share some of the misconceptions or pitfalls that actually take place and our misunderstanding of what the coverage actually is or should be.
Absolutely. Thank you so much, Anna. So one of the things that I see is when I'm looking at a policy perhaps from a potential customer and it's from another carrier, we'll look through it and I always tell people, when's the last time you looked at your declarations page? And that declarations page is exactly what it is. It's declaring what that insurance carrier is going to do. It identifies the property, identifies the coverages, and also, more importantly, it will also identify exclusions. And most people will just not even look through that. They have a policy and they just assume everything is covered. So one thing I would caution consumers is please really take a look at that declarations page. Look at what is being covered and what the type of coverage is. And what I mean by that is it might identify your home and say that you're covered, but it might say that it's actual cash value or replacement cost of that property. And there's a very big difference between those two terms. And so the difference between those terms is replacement cost is just what it is. It's the cost to replace your home with like material. So perhaps your home was built with brick that was made in the 1950s and they can no longer find that like material, that same shade and whatnot, but they're going to try to find things that are similar as possible to that property. Now, actual cash value is replacement cost minus depreciation. And that could be thousands of dollars of a difference in terms of rebuilding your property. So that's one thing that I want to caution homeowners about. The other thing that gets into a problem as well is the contents coverage. And that's a section on your policy. And in that particular scenario, same thing can happen. Your contents might be covered as actual cash value or full replacement cost. So that could be, again, thousands and thousands of dollars difference. Perhaps you bought that TV 10 years ago, and now that same TV is going to cost you a whole different amount of money in today's money. So it doesn't matter that it's 15 years old. How much is it going to cost you to replace in today's value? You have to do your entire home. That's the difference between maybe $40,000 or $60,000, right?
Correct.
So a lot of money. Another item that I want to talk to consumers about as well is did you properly insure your contents to begin with so that they would be covered if you had a total fire, a total loss? Right? And what I mean by that is so you've insured your home and you thought you insured your contents, but you didn't bother to look in terms of what the limits were for those contents. Every homeowner's policy will have a maximum that it might cover for furs or jewelry or musical instruments or any number of other things. And so it's really important. So let's just say that one of my customers has a baby grand piano. For musical instruments, there's a cap on most insurance policies for fire about musical instruments. Well, his is over $20,000. So we had to schedule that and get it appraised to make sure that we could go ahead and insure that so that if we had a total loss, that musical instrument was actually covered, right? So it's really important to make sure that you identify those key pieces and what your actual limits are on your policy, and that those things are properly covered under that policy.
Yes, I think so many people actually don't even realize that, and I think that misconception also comes that these items that you have are somehow are not insurable, or it's so hard to figure out what the actual coverage is. How do what I get the resistance I get from my clients is like, how do I actually get it appraised? inherited this from my grandma, and it's more of a sentimental value than actual, it's like some of these things it's hard to figure out. So what I suggest is make a decision whether that's something you want to protect, right? Like the example you gave of the piano, or it's something that's going to be very hard to replace, but you just have to be okay with the fact that if it's gone, it's gone. And so you'll just have to deal with that at that point. But if it's something that you can't live without, right, absolutely need to have.
Absolutely. And another thing that I tell people is let's prepare even before that. So one of the things that happens is if you have a total fire, most often people have their records in their home. So one of the things that I recommend is we have a great free app from Allstate. It's called Digital Locker. And I tell people, regardless if you're a customer of mine or any other carrier, you can download that app. It is completely free. And what you do is you go around your house, and you take pictures of the things in that house. I'll even open drawers and take pictures in the drawers, and even open my closet so that you can show the different items, like number of shoes for some of you ladies, right? And your wardrobe, so that you can an adjuster can properly go ahead and do a proper check to replace items. But it's stored in the cloud. It's protected, and that way, even if you lose your phone, you can still access that material and go ahead and provide it to an adjuster with those costs and those pictures to validate.
Oh, that's awesome. We're going to put a link to an app. I think it's a great, I had a client who actually very recently, you all guys are aware about the fire that we had in Northern California, right? Yes. In the Napa, Santa Rosa area. And I had an actually interesting case. I was flying back home from Baltimore to San Francisco. This was like maybe 2 months ago. And two people were sitting next to me. And they, just started a little chit-chat conversation. And the lady next to me says, well, are you flying home? I said, yes, I am going home. And so I asked her, the same question. She says, yes, we are flying home, except that we have no home, right? So it's like, and so I chatted with her a little bit. But it's tough, and it's I asked the first question I asked her. She didn't know I was what I was doing, and I'm a financial planner. But the first question I asked her, I said, "Do you think you have enough adequate insurance coverage?" And she shook her head and said, "We don't," which is true, right? And for most people. And so think about that when you actually come home and there is no home. It's not. It's really like starting from scratch. So. I like the idea of actually tracking, possibly, right, getting pictures of all the items that you own, and because wouldn't it be very hard to prove to the insurance company that you actually have these things if you never scheduled them, if you never took pictures of them, and you kind of relied on just the general coverage?
Absolutely, and it just helps process that claim so much faster because you're already emotionally devastated. And then just add, insult to injury, you're having to try to recall these things. And I don't know about you, but I could not, there's no way I'd be able to remember every single thing if I just lost everything.
Exactly. Yes.
So it's something to go ahead and prepare. And one thing too that kind of lines up with saving is to remember as well that every policy has a deductible. So even if you have a total loss, you have a deductible that you have to meet as well. And so it's important to talk about having an emergency or some sort of backup plan in savings so that you can have those funds for the deductible before your policy kicks in.
True. That's, yes, emergency fund is one of the things I beat to death with all of my clients. And I don't think I'll ever stop. I actually had a client this afternoon who, it's not typical, it is typical, did not have any emergency reserve. So yes, you have to work on that. A credit card is not an emergency reserve, but we manage it somehow. Not the best way to do that. So in terms of, let's talk a little bit about flood insurance. So how, can you give us some basics and some, common things for people to know about in terms of the flood coverage, if there's a flood?
I'm glad you're asking about this because, especially with the weather patterns these days, it's the frequency and severity of some of these storms is just really shocking to me. So, speaking of which, tracking several storms here from my area, and so that's a great concern for me as well. Some areas that are not typically high-risk areas are becoming more and more prone to flooding. So talking about flood is a really important item. Most homeowners think that flood is a covered peril under their homeowners, and it is not. So the type of flooding that might be covered in a homeowner situation is internal flooding, and it has to be sudden and accidental. So what I mean by that is your hot water heater decided to break down and flood, sudden and accidental, right then and there, and it flooded your property. So something like that might be covered. But if it was an ongoing slow leak and it covered damage, it would not, because it was not sudden or accidental. It was over a long period of time. So external flooding is not covered by your homeowner's policy. You would actually need to have a flood policy, an external flood policy. And that's a policy that's actually done by FEMA, but your local carriers could potentially be appointed by FEMA and be able to write. So, for example, my company is appointed by FEMA, and we're able to write flood insurance. One of the things that people also don't realize is, here's what I get calls about sometimes, is someone will track a really bad storm and they'll call us and say, we want flood insurance. And I'll say, are you aware that it does not take an effect for 30 days? There's 30-day clock. And they're like, no, we didn't. We want it right now. That storm is coming. And
too late though.
Yeah, too late. And so the federal government knows that there will be people that want to go ahead and put it in place just for that particular storm and cancel.
Right.
So that is a no-no. So it is important to understand that there is a 30-day waiting period to have a flood insurance take into effect. And there is one exception. The exception is if you are purchasing a property and and you have a loan as part of it, and as part of that loan you're required to have flood insurance. You're either refinancing a property, buying a new property, or extending that loan, and in which case you are not required to have a wait period. That is the exception.
It makes sense.
Yeah, so for that purpose, that is not required. And so I want to just talk about that. And I think some people have some other misconceptions in terms of flood insurance. And here's a couple of different things. So the average flood insurance policy I see is between $700 and $800 annual. The annual flood claim that they could process is over $31,000.
Oh wow, that's right.
Yeah.
Wow, there's definitely some value here in terms of the kind of damage that there could be if you don't have the proper coverage. Wow. Okay, I did not realize what the numbers were.
And did you know as well, and this is actually, I took this from FEMA's website, that 20% of flood claims that have been paid out each year on average are for people that live outside of high prone
flood areas?
Yeah.
Wow.
Yeah, and that's the average every year. It's not statistically accurate.
No, that's interesting. No, I didn't know that. More of my clients do ask about, especially, like for example, here in Arlington or Virginia, there's some I have a number of clients here that there are areas that are definitely prone to floods. That's the areas that, at least in my understanding, that maybe and would the cost be more if that's right? So those are the folks that are concerned about it. Those of us who don't live in a flood area like that are not even thinking about that kind of coverage.
Absolutely. And I point that out because there was a town adjacent to where I live, and 2 years ago, it was not in a high risk, high flood risk area, and got flooded. And most of those people did not have any flood insurance.
Wow.
So one of the things that is really important for people to notate is sometimes they think that because they don't have flood insurance, they're waiting for maybe some sort of disaster relief. And in those particular scenarios, unless the federal government goes and declares it a disaster, there is no assistance. And if they do declare it a federal disaster and you don't have flood insurance, the assistance you get is a loan with a lower interest rate, and you still have to pay it back.
Paying back.
Right. And if you have flood insurance, that payment that you receive from that claim, you don't pay that.
Mm-hmm. It's definitely worth it. Can we talk about the other? So we talked about external flood that's caused by external perils, right? What about internal? This is one of the things that I always look for on insurance policies. Is there a water and sewer backup, right? What if the toilet overflows, or what if all of a sudden the water gets shut down and then it starts, the faucet leaks or something like that? Can we talk about that? And what do we need to know about in terms of the coverage when we look? Go ahead.
Absolutely. So that's going to vary company to company, and it's also going to vary in terms of that policy, because, like, just for example, with my company and the carrier, depending upon the age of that policy, it might be grandfather caused under in a very old policy that has certain coverages that maybe the newer ones don't. You might cover things that are under the slab versus in the walls. So you want to double check your actual, so you want to read your declaration pages in terms of what is actually covered under that. And that's a good thing to call your agent about and actually clarify as to what that coverage might be. So for example, the floods that are generally covered internally, again, we talked about sudden and accidental. So if you have something that's leaking that is going to slow progressively, and you just found out about it, it's not sudden, and so generally speaking, it might not be covered. You'd have to check again in terms of that specific type of policy. Now, perhaps it might cover some of the destruction on the walls, but not the pipes itself. So it might cover damage to your structure, but not actually to the plumbing itself. And especially if you have to cut into your slab. So double check that, because it's going to vary between carrier to carrier. And also even within the carrier, the specific policy that was written under, because I have like 4 different policies that are active right now. Some of them are 40 years old, 30 years old, 20.
Wow.
10. And so depending upon those age groups and that specific policy, there's going to be a wide array of things that are covered and not covered between each of those policies themselves.
Got it. Okay. That definitely makes sense. But a lot of times I also see that there's a certain dollar limit. Is that something to be cautious about, or how do you go about that?
Okay, so one thing is there's going to be check the deductible amount and actually what it's going to cover. So there might be several claims within it, depending upon, is there anything else that caused it? So for example, sometimes during our storms, the initial thing that caused the issue was maybe maybe it was a lightning strike that might have been partially to blame for something. So that's one claim, and it might have covered some of that damage. And then there was subsequent damage caused by the water afterwards, right? And so that might be 2 separate claims. It might have 2 separate deductibles. And when they investigate that, they might be able to ascertain as to how much that might be covered. So those are, I know that sounds kind of a strange thing, but we've seen some really strange things over the years.
I'm sure.
It was covered by 2 different perils, and so you have to break it into which peril caused what issue.
Wow, got it. So we've got a couple more minutes that we have left on our show today. Are there any last-minute thoughts you want to share with our listeners and viewers on both of these topics?
Yeah, so on the flooding, this is kind of a weird, quirky thing that, and I actually had this, I had to research this because I've never had this issue before. So one thing to notate is your flood policy won't pay out unless there are 2 or more homes on your block that are affected by flood.
Wow.
So if you're the only house that is affected, there is no payout. So that's something important. And also that renters qualify for flood policy too. It would just cover the content. So that's something to know. And then there's actually flood insurance for commercial business owners. That's up to $500,000 of structure damage and $500,000 for their content, so up to $1 million. That's
interesting. You mentioned renters insurance, and I see this quite often, but wanted to make sure that everybody else understood this too. Sometimes there's the earthquake piece it's an attachment to the overall renter's policy. And so what does that cover?
Okay, so for the state of Texas, it's actually usually a separate policy. It's not attached here as part of a renter's. If you want it, you can have it as a separate policy. And so if you look at a lot of renters policies or homeowners policies, they don't cover earth movement. And earth movement would be an earthquake. And so in terms of that, if there's any damages due to that, you're not going to get covered. So it's important if you live in an area that does have earth movement, especially like in parts of North Texas where we have a lot of drilling down below, and you're starting to see more earthquake activity. That structure could need quite a bit. Rafters could fall. You might have damage in terms of your personal property based on property damage, hitting your personal property. And so as a result of that, I think it's really important to investigate based on where you live.
That's true. And I have a fair amount of clients in California, so we know a little bit about earthquakes in California here. Hopefully not anytime soon. Well, great. This was really helpful. Thank you so much for joining us, Linda. So since you're the very honorable guest today on our show, you get to share a quote so we can close the show. But again, I thank you so much. I appreciate everybody tuning in. Let us know if you have any follow-up questions. I'm sure that between Linda and I, we can figure out the answers and get back to you. And we'll share that app that you've suggested for tracking your contents. And I think it's a very neat tool to have.
Fantastic. Well, I can't wait to share this quote. It's one of my favorite poets is Khalil Gibran. And the quote I'm sharing is, "Money is like love. It kills slowly and painfully the one who withholds it and enlivens the other who gets it on his fellow man." And I thought that was so appropriate because of the group that I'm with, 100 Women Who Care, and also because with my agency, every couple of months we choose a charity and donate to that group. So it enriches us. Mostly, I think it's for selfish reasons. Because I believe that we get more than what we give. So I hope that everyone will take that example. And it doesn't always have to be a financial thing that you give. Sometimes it's of your time, and it enriches us back in spirit.
Exactly. I am for that. This wonderful quote. Thank you so much again for joining us. Everybody take care. I'll see you back again here next Wednesday on The Money Date. Linda, thanks so much again. Bye, everyone.